Thank you for joining me this Friday, the 9th of December. I'm Grady, a market analyst with Bell Direct. This is the weekly market update. As we head into the holiday season, market expectations a few months ago for consumer spending over the Christmas period compared to now are vastly different. In this high interest rate inflationary environment, consumer spending should traditionally be declining as the cost of financing debts increases with every rate hike, making spending money on discretionary goods and services less of a priority. However, much to the RBA's dismay, consumer spending remains stubbornly high in Australia and is not appearing to budge with every rate hike. The Australian Bureau of Statistics Household Spending Indicator for the calendar year to October has increased 20.7%, with services up 34.2% and goods up 9.3%. Non-discretionary spend rose 21% and discretionary spend jumped 20.4%. While clothing and footwear spend dropped dramatically from September to October, alcohol and tobacco spend more than tripled from September to October. Consumer spending on food has also increased from August to October. Over the year, the highest increase in consumer spend has been felt in transport, hotels, cafes and restaurants, and clothing and footwear. So heading into the festive season, retail company outlooks from a few months ago when interest rates began rising are now changing in line with the expectation of continued strong consumer spending this holiday season. Harvey Norman shares rose 5.15% over the last month following the release of a trading update from the period of 1st of July to October 31st, outlining sales revenue rose 6.9%, even as interest rates continue to rise. Australian sales revenue rose 9.1% over the quarter, or 8.8% on the same store sales basis, and company CEO Gerry Harvey said sales of big screen TVs are very strong. Investors and consumers alike are still piling into Harvey Norman, especially ahead of the busy Christmas season, where Mr. Harvey said they expect to have a really strong Christmas. Fashion jewellery company Lovisa continues its strong trajectory from the first 7 weeks of the new financial year, with sales up 16.1% on FY22 for the year to date and total sales for the period up 60% on FY22. The company is also heavily focused on expansion, with 47 net new stores opened this year, taking the total number of stores to 676 over 26 countries. Shares in Lovisa are up 66%, in a sign investors and consumers both still value this discretionary retailer in the current market climate in Australia. Australia's private consumption as a percentage of GDP is around 50%. If spending remains high for even the short term, inflation will naturally remain high, which goes against the efforts of the RBA. But eventually, rising interest rates will win and consumer spending will curb. So the RBA has a balancing act in lowering inflation whilst preventing the Australian economy falling into a recession. Locally, from Monday to Thursday, the ASX lost 1.73% as investor fears of a global recession increased after surprising economic and jobs data out of the US signalled the Fed's aggressive rate hikes have had very little impact on curbing inflation yet. GDP growth data in Australia was also released this week, coming in at 0.6% growth, which was below expectations but still outlined strong consumer spending. This data also added to investor fears of further rate hikes in Australia. The winning stocks from Monday to Thursday were Chalice Mining, which added 8.25% after revealing promising new sulphide mineralisation in drilling results. Fortescue Metals Group added 5.7% and Nufarm rallied just over 5% over the 4 days. And on the losing end of the ASX 200, Downer tanked 23.14% from Monday to Thursday after the company flagged accounting irregularities and downgraded its profit guidance for FY23 in an update to investors. Novonix also fell almost 20% and BrainChip lost over 14% over the 4 days. Taking a look at the All Ords, Strike Energy added 17.19% over the week after the gas producer announced it was increasing its share in Warrego via share purchase agreements with a number of Warrego shareholders via the swap for Strike shares for Warrego shares at a 1-to-1 ratio. Resolute Mining added 16.67% and Ore Corp rallied 14.3% for the week. Atomos tanked almost 31% for the week after the company withdrew financial guidance. The most traded stocks by Bell Direct clients this week were Beach Energy, Karoon Energy, Worley and St Barbara. Investors also bought into Nickel Industries, Core Lithium and Pilbara Minerals, while taking profits from Rio Tinto, BHP and Telstra Group. And the most traded ETFs this week were VanEck Australian Floating Rate ETF, Beta Shares ASX Strong Bear Hedge Fund and Vanguard Australia Shares Index ETF. On the economic data front for next week, Westpac consumer confidence data for December is out on Tuesday, with the market expecting an increase to 80 points for December from a decline to 78 points in November. NAB business confidence data for November is also out on Tuesday, with the market expecting a jump to 2 points from 0 in October. In the US, investors will be awaiting the rate hike outcome from the Fed's latest FOMC meeting next week and core inflation in the US, which is out for November on Wednesday. That's all we have time for today. I'm Grady Wolf with Bell Direct. Have a lovely Friday. Enjoy your weekend and as always, happy investing.